Raymond here with another video, financial statements and analysis, episode 6. We're going to be analyzing Royal Dutch Shell. So let's start off with the usual, looking at the charts. As its time as a listed company, it's depreciated 3.83%, which isn't too bad if you look at how long it's been available, about 4 years. That's just on this app in particular, Trading 212. My investment has depreciated 19%, which is really good. I've always struggled with one thing. If anyone can help me out, I'll be very, very appreciative. I've always struggled with one thing. If a company's financials aren't the best or actually quite poor, as well as their market performance, how is it that I can come to a result like this? How can I attain 19% return on investment when a company's overall performance over a long period, as well as their financial statements, show that the company shouldn't really be performing very well at all? Anyway, if anyone has an answer to that, please hit me up in the comments below. Back to the financial statements. 83,000 employees, energy sector, of course. Oil and gas operations, market cap is 86.44 billion. PE ratio 4.47, which is amazing. I look for 10 and below, so 4.47 is really good. Revenue to 293 billion. That's amazing. Any company that delivers over 100 billion in revenue is a massive company. So, but a lot of people know Royal Dutch Shell, so they know it's going to be delivering massive revenue. Earnings per share 2.54 euros per share. Let's look at the share price, 221. So it's about 10%. So in about 10 years, the company will earn enough in earnings to cover the investors' initial investment. So let's look at the dividend yield. It's almost 10. Honestly, so far this company is looking really good. It's hitting some good boxes. So 4.47 PE ratio is amazing, which means it's really cheap. That's like one of the cheapest I've ever seen, especially considering how large the company is. It's one of the largest companies in terms of revenue that I've ever seen. Earnings per share, really good. It's about 10% of the current share price. Dividend yield, almost 10%. That is insane. Like 10% dividend yield is ridiculous. This company is not almost certain to stay around for a very long time, because it's already been around for a long time, but also because it has a competitive advantage. Which company could you tell me that is larger in terms of oil and gas operations? There aren't many competitors. So let's look at the beta. The beta is 1. It's right on the dot in terms of the market average, which is really good. Let's look at the financial summary. Brief. Okay, for the 6 month ended 30th of June 2020, Royal Dutch Shell PLC revenues decreased 47%. Of course, it's not good. Net loss applicable to common stockholders totaled about 18.16 billion. Of course, it's not good. What you find with a lot of energy companies, especially oil companies, they're not likely, but they're more likely than other companies to experience accidents when they're transporting their goods, like for example the BP oil crisis. Anyway, so versus an income of 9 billion in revenue, reflect integrated gas segment decreased of 15% to 17.5 billion. Oil equivalent production barrels per day decreased of 7%. So a lot of decreases here. Net loss reflects exploration and development cost increase. So there's a few increases in development and exploration costs, but overall it hasn't really done well. It's decreased quite a lot in lots of different. I mean, it's tough to manage an energy company, so there's a lot of physical goods involved, a lot of shipments, a lot of different laws that I have to be abided by. Okay, so we're going to the income statement now. Profit margin is about 4.59%, which isn't the best, but it's not the worst. It could be negative, it could be a lot lower. Some profit margins, for example in the retail sector like Walmart, they have profit margins of 2-3%. So 4.59% is not the worst. It was higher last year. Well, I don't think it was higher last year. I think it was the same, because the revenue was a bit larger. So let's look at the balance sheet. The balance sheet suggests that the total assets of the company is over 400 billion, which is amazing. It's more than the revenue. Let's just see the liabilities, 270 billion, which is about half. So the debt to asset ratio is about 53%. Let's check the cash flow statement. The cash flow statement suggests that the company has added 13.78 billion euros of cash to its to its assets. The previous year it lost 8.69 billion, and the year before it gained 6.83. So overall amazing in terms of the net change in cash. One thing I have to mention as well that we looked at in the previous that we're going to look at in the next video is the financial statements being up to date. So as you can see, we're in 2021 and they've only got financial statements up to 2019-2020, which means they're going to release them later, which even still that means they're quite late. But if they are eventually going to release the financial statements, that's amazing. If they're not, that shows that the company is probably going into bankruptcy or is not doing very well at all. But I don't think that's the case because we're talking about Royal Dutch Shell. But I really do hope you guys enjoyed it. I'm going to be making a lot more of the videos like this. There's still over 235, I believe. Around 9,000 videos that I have to make on different companies, and that's just on this platform alone. So look out for them, and I'll see you in the next one.